All right, so now we're going to take a quick look at the consumer cyclical sector, and these are the three companies that we are looking at. International Paper, simply because it is a it is an MVP. It is the sector MVP, and it has been for quite some time. And again, what that simply means is that it has consistently, at least 6 times out of 12, been on the best performing portfolio for that month. Okay, so doesn't say a whole lot about the company, but it does say that it is in good company, right? So let's take a quick look here, just at some comparisons. The GPC and HAS are both on our list of companies to choose from, and they are about the same price. International Paper, $51. Again, you can buy more shares, when the price is cheaper, but doesn't really say a whole lot about the company itself. The dividend, quite higher for International Paper. PE ratio. Now, this is going to be, we can't use this because the PE ratio for Hasbro, which is a toy and entertainment company, versus an auto parts company, versus International Paper, which does a little bit of everything. We can't really use that here. What we can do, however, is looking at the difference in PE. All right, now Hasbro, the PE ratio has gone up a bunch, right? And we see that here. The PE is currently 61. The high, however, is 27. You know what? I'm gonna have to look at that because something doesn't seem right about that. Our numbers may be wrong there. Let's take a look here. If I go here, let me bring this over and blow this up a little bit. All right. So we're looking at the current PE, and see. Oh, here we go. Yeah, 61. There we go. All right, so let's do this now. Let's look at historical PE ratio, Hasbro. And Y charts is what we like to look at, and see. So you see here, it's been about the same, and then for some reason it jumps way up in 2018. All right, now PE ratio is the price to earnings. Okay, and so you have the price at the top, which we'll say is $99, divided by the earnings. Okay, now what that means is if the earnings are, let's say, $20 per share, then you have a PE ratio of roughly 5, right? Okay. In this case, our PE ratio is 60, so that would mean that our earnings per share would be something like 2 point something. Really more than that, right? Let's see, 99 divided by, see, let's do 1.5, see what we come up with. There we go. All right. So the only way for that to happen is that either earnings would have to come way down, right? Or it would mean that the number of shares, okay, because if we do earnings, so 100 divided by 500 shares, gives us 0.2. 100. 100 divided by more shares gives us smaller earnings, right? So it's possible that the shares have increased a bunch, means they issued more shares, right? So those are the two reasons why we can have this huge increase in the PE ratio. All right, so I'm gonna have to find out exactly what happened this year to cause that. Make sure it's nothing going on. I can say that Hasbro recently took kind of a dip in their price, and it was due to Toys R Us filing for bankruptcy. Okay, so what does that mean? Well, it means a couple things, right? Toys R Us, when I was a kid growing up, that was the place you went for toys, right? And with the advent of, the internet and Amazon, all this kind of stuff, I mean, where do you buy toys these days? Honestly, if I were to buy toys, I typically, I've always gone to Toys R Us, but you got Walmart, is a big one, of course. And typically I'll go to really like smaller stores. I like the educational toys myself, so I usually go to smaller stores. I go to the store in the mall, something like that. So that's what's going on. So it took a pretty big dip when Toys R Us filed bankruptcy because, of course, they sold a lot of their toys in Toys R Us. But this is a global brand. They sell toys all over. And I don't see toys being down anytime soon. They just recently acquired the rights to Power Rangers, which is pretty good. So they have toys. They have Transformers. They have Power Rangers. Those are the two big ones. And of course, they get licensing deals for Star Wars and all this kind of stuff. So they have a lot going for themselves. Hasbro does. I didn't see any real negatives other than the fact that they may be acquired at some point. It's possible that Disney could be looking at them, or some company in the toy space, just because it's not as, I guess, popular as it once was. That's the only thing I can say about it. But as long as the economy in the U.S., particularly Hasbro sells 61% of all their revenue comes from the U.S. So, I mean, what that means is they're fairly diversified. If we were to see a downturn at some point, of course, that means people buy less toys, and I'm sure the price will suffer. I don't see that happening anytime soon. So anyway, so that's what's going on there. Let's take a look. Let's go back here. All right. Net profit. I think it can be fair, I think, to compare these two when it comes to net profit, because Hasbro basically makes and sells things, and General Auto Parts makes and sells things, right? They make and sell auto parts. It's basically the same thing. Operating profit, Hasbro beats them out there. Return on assets, I would say Hasbro probably has more intangible assets than GPC does, so it's kind of hard to compare. This one we can definitely compare, which is going to be cash per share. Looks like Hasbro has a lot more cash on hand. That's great. I love that. Same thing, cash to debt. I mean, that's beautiful. Look at that. I love seeing that. Here's the thing. Look at that. Look at that. Short interest. 6% short interest. There's a lot of people betting on Hasbro's downfall. A lot of people betting on their downfall. And I would say that has a whole lot to do with, we just talked about, Toys R Us closing down. I don't have any kids myself, so it's hard for me to say. I can say this: Hasbro has Nerf. I mean, Nerf doesn't go away. Who doesn't buy their kid a Nerf gun? I mean, I've even bought a Nerf gun. I don't see a lot of the toy soldiers anymore. I don't see a lot of the action figures. I don't see a lot of that. But yeah, I mean, Nerf guns, um, the Star Wars lightsabers, I can definitely see that stuff. All right, Alpha. So International Paper has a much better Alpha. Hasbro and GPC about the same. Up moves looks like GPC beats out Hasbro. That gives me a little bit of pause. I'll go back and look at the price history and just kind of see what's going on there. Down moves, same thing. Looks like GPC beats them out. GPC is a lot more volatile. Just looking at these numbers, no, not much more. 88, 77 is close. All right, beta. So Hasbro has a much better beta, performs much better when the market is in a downtrend. The market is actually in an uptrend right now, so I expect the alpha to win. And it looks like Hasbro beats GPC in alpha and beta, so that's good news. 1 month return, Hasbro has a really decent return. And then volatility, of course, and that has a lot to do with the short interest. Just because there's so many people that's betting on this stock to lose, what's happening is when the stock goes up, there's a lot of people buying to get out of their position, and when the market goes down, there's a lot of people selling to make money. Looks like GPC has a better score, and this is based on the alpha standard deviation. So what that tells me is that GPC has the better alpha versus volatility. Hasbro has the better beta. All right, let's take a look here at our history. All right, Hasbro, of course, killing them on average. Now let's just look back and see kind of what's going on. What we're looking for is really just price movement. Let's just kind of compare one or the other. It looks like we have a fairly large drop there. Another large drop, another large. Oh my goodness, look at that. This is 3 months in a row. That is 25%. 25% drop in a matter of 3 months. That's a big deal. Let's see here. Oh my goodness. Oh my goodness. Look at this. 40% drop. 2017. Oh no. 35. I mean, this thing, when it loses, it loses. My goodness. I mean, yeah, I guess toys can be that volatile. When they work, they work. When they don't, they don't. When you're really excited about a new toy and it works and everyone goes out and buys it, I can see that being a great thing. And when you don't get it right, then you're making a bunch of toys and no one buys. And what do you do with all those toys? Discount them, trash them, Auto parts are going to be a bit more stable. There's a lot of talk about whether or not people are buying used cars or new cars. Typically, when the economy is doing better, there's more people buying new cars versus used cars. And when the economy is not doing so well, there's people buying used cars. Conversely, when the market is doing great, there's people that's fixing up old cars too. So it's a fairly stable industry, I would say. Used auto part, no, not used auto parts, but auto parts is a fairly stable industry. Why it's in the consumer cyclical sector, not sure, to be very honest with you, but it is, and so that's what we have to work with. Based on, I'll say, based on some of these numbers that we were looking at, just the previous. I mean, that definitely gives me pause. And if I go back, let's see, if I go back, and unfortunately, I can't put this on the screen. Something I was actually looking at earlier. Let's see if I can blow this up here. All right, here we go. See if this works for me. See, press releases. Yeah. Oh, well, maybe. All right, here we go. We're gonna go back to what was that? April. Now we'll do August. To August. Okay. Now that's as far as it's gonna let us go. All right. Let's see, March. Here we go. All right. And we're just gonna take a quick look at some of these. Let's talk about toys. Boardwalk is on sale. Value has emerged. Toy Stories has no end in sight. And go back to still bullish. Buy on a drop. Deserves your attention. Filthy reaction. One of the best plays. Investing in toys is eating Mattel's lunch. Strong buy. Now, Modern Masters Gathering will have its best sales ever. Say yes to G.I. Joe. Alright. So, I mean, I'm seeing all good stuff here. Here we go. That's what's going on. Whenever you have, a story about a company buying another company, the first thing on people's minds is, well, how much is one company going to pay for the other company? And depending on whether or not it's the market thinks it's a good deal or not, it changes how people react, right? They may want to buy the company, they may want to sell it, right? If I think that Mattel purchasing Hasbro or the other way around is going to benefit me in some way, because maybe they're going to sometimes one company gives another company cash plus stock. Sometimes it's all stock. Sometimes it's all cash. I mean, there's a lot of things that go into this. There's all talk who's going to get what liabilities, who's going to get what assets, and all this kind of stuff. And so whenever you have those kind of talks, then you have people saying, okay, well, maybe it's going to be good, maybe it's not going to be good. And so when people think it's going to be good, well, the stock price goes up. Then all of a sudden you hear a story saying, oh, well, it doesn't look like the merger is going to go through, and you'll have a big price drop. So that kind of stuff happens quite a bit. As far as I know, there's no immediate talks about any mergers or acquisitions going on. However, we do know that there is a lot of merger and acquisitions going on in that particular industry, in the whole toy and entertainment industry. Like I said, I mean, there's talk of Disney even looking at Hasbro. So we can go back and look at some of this stuff. The biggest one I think that was really on my mind, and I'm doing this now just because I'm just now seeing this. Look, 40%. My goodness, that's April, March, February of 17. I think that's kind of what we were just looking at, honestly. Um, yeah, see, Hasbro Mattel merger speculation. Will Barbie say yes to G.I. Joe? I mean, there you go. So that's what that's all about. Um, a bargain. It's December 2016. So, um, it makes me feel a little better. Makes me feel a little better. That big price drop was because of merger talks. I like Hasbro. I like Hasbro. I like the fact that they have the Power Rangers and Transformers. Um, I like that they have just that model of licensing and selling toys. I mean, it works, right? And like I said, when they get it right, they get it right. Um, I do feel, um, I hate to say feel, but I do feel um, that the best performing portfolio as far as return goes came from alpha standard deviation, right? However, the best consistent performing portfolio, is the only other way I can put it, came from beta. So, um, I went with beta before with Blackstone, and I think I have to go with beta again for Hasbro. Um, it is a bit of a risk. Well, not a bit. It's a risk, no doubt about it. I mean, that short interest is pretty high. Um, but where's the short interest? Yeah, the short interest is high. Um, but I mean, it performs well. There's just no question about it. Let's see if I can pull it up just really quick here. There we go. Let's look at Hasbro, and let's take out EMO. We're going to compare it with GPC. And for fun, we'll throw in IP and just see where we are. And you're going to do a nice little yellow. All right. And I'm going to look at this over a year. We can easily see over the last year, international paper underperforms by a lot. Looks like GPC consistently outperformed Hasbro. We do see Hasbro was really, I mean, my goodness, this was, I don't have a date on it right away, but this is clearly, let's see. Okay, here we go. So this is our April-May drop. This was January. No, actually, this is this year. Yeah, 18. Okay. So this is January, April. So big drop. We see that it has recovered. Has it ever outperformed GPC? Let's go back 5 years. Let's see. Okay, there we go. Well, see, puts it in perspective, doesn't it? So this is performance over 5 years. You see, over 5 years, Hasbro has just killed all these guys fourfold. Okay, let's look 2 years. Hasbro again killed these guys. I mean, GPC is way down here. This is recently, right? And this number Okay, this number, remember, is lower because of those months before with all the acquisition and merger talks that didn't go through. You see, so that's what has caused this number to be so low over the last year. So what that means is that if we are under the assumption, and I'm not going to say under the assumption, if we believe, no, I'm not going to say if we believe, if Hasboro is a good company. They're not in any problems with debt or bankruptcy, anything like that. They have plenty of cash. They have a decent model. They have new licensing coming online that won't even hit their books until 2019. But I'm sure it has played some role in the price that it's at today, for sure. When that news came through about the Power Rangers, they have some upside for sure. General Parts Company, hey, stable growth. I don't see it going anywhere anytime soon. I shop, or at least I used to shop at AutoZone quite a bit, and they carry all of General Parts parts, alternators, starters, things of that nature. And it's a staple, right? I mean, when you go to AutoZone, you buy an alternator, your box is probably going to say GPC on it. Okay, so I mean, it's a consistent thing. They're not going anywhere anytime soon. But where's the catalyst? Where is the story that says, oh, I think these guys can really do something with this? The only story that I read recently was a negative one, and it has to do with their purchasing of a company by the name of Essident, and see what happens if I can get back to it just for fun. Okay, well, yeah, not gonna be able to get back to it. So anyway, Essident, Essident, as far as I can tell, is just not a great purchase. They sell office equipment. Why does General Parts Company that sells automotive parts want to get into office equipment? I don't know. It's technically the same business. Maybe they're thinking they can take the business and their management, their know-how, and their expertise can turn the thing around and actually make some money with it. Maybe that's what's going on. I like to read the Glassdoor reviews, and this is reviews of employees that review their company. And so I like to read those when I'm looking at investing in different companies. And Essident had really good reviews. A lot of the employees were saying that they have flexible hours, things of this nature. But they also said that the business just hasn't done anything or gone anywhere for years. It's what a few of the employees said. That it's one employee said literally that working at that company is like showing up to a lame party waiting for excitement. I mean, what does that tell you, right? I mean, yeah, maybe they can turn this furniture company into something great. I doubt it. It's office furniture. I mean, what special thing do they have that they're just gonna knock the socks off of people with? I don't know what that it can be. Honestly, I don't see it happening. So, I hate to do it just because alpha standard deviation, the highest performer, but I have to go with Hasbro. Hasbro beats on almost every level other than the dividend. The dividend is pretty low, 2.5, but I mean it gets the job done, and I feel as though I'm getting this thing fairly cheap, simply based on the fact that it has really come back from being down so much. So that's it.